Good. Well, I have it as well, almost 6:30 my time. Just about to change over. For all intent and purposes, let's just call this 6:30 and go ahead. There it goes. And get started for tonight. Well, thanks for joining me tonight. And this is going to be recorded, so we'll have this on record. So thanks for joining me. We're going to go through the homework on the ES. We're going to go through a lot of things that we went through last week. We're going to primarily focus on the ES, and I'm going to talk a little bit about reading the print. And just as I look at OFA, and I've talked about this before, because people have asked me, what about thin volume? What about thick volume? What do I do with those? And is it the same? And is it relevant and relative? And the answer is yes. And I'm gonna show you an oil tonight. And I'm just doing this in sim, of course, but I'm gonna show you some things as you start practicing reading the print relative to the volume profile, things that you can start to look at to make sense of all this. So let's go ahead and get started with this thing called our homework. So you have the template for this, and what I do every week is I'll just save one. I'll save my homework as a separate name, and I'll save it for the week. So this is, if you can see up here, this is homework. You can call it ES homework for the week of 8/11, so starting tomorrow. So on Monday, I'm going to start filling in the information, and I'm using the prior session chart date. So this is Monday 8/11. I'm sorry, this is going to Monday. This is going to be Monday 8, and the chart date is going to be from Friday. So the chart date is actually going to be the 8th. Okay, so the chart date is actually going to be the prior session. So that's going to be the 8th. But the homework sheet, this is going to be for Monday through Friday with this Monday's information. So we're going to trade, we're going to build a trade plan for Monday, but we're going to use the prior session date, which is the 8th for Monday. So every Monday using the previous Friday. Does that make sense? That good? Okay, I want to make sure I'm clear with that. All right, so what we're going to do is we're just going to start charting these things. And our open was at 1909 even. And one of the things that I do to start charting this is I bring down my handy dandy chart. I know you have this template. It is just the RTH session only for the ES. RTH session only. So we open down here at night. There's our open right there, that blue line, our open. And our range, in order to determine are we in range, out of range, in value, out of value, we're looking at the previous day's session. So in order to determine, did we open up in or out of value, in and out or out of range? And one of the reasons I have people do this is just to really get a feel for the instrument, to start to understand how often does the ES open up in value or out of range? And what happens? What are some of the tendencies of the ES as it opens up out of range or out of value? And until people actually start marking this and understanding the relevance of it, they don't really get it. They don't understand it. It's not something that they typically mark. So as I look at the previous day and I'm looking at our open here, what I'm trying to determine is here's our value from here to here. I'm trying to determine did it open up in value and in range. And the answer is yes. It opened up in value and inside of range. Because one of the things I want to start to understand is, so it opened up in value and in range. Now I want to get a sense, did it break value on Thursday or Friday from Thursday? Did it break Thursday's value? And this is what I'm looking at as I trade. Because if it starts breaking value, then I care about this low. And how far of a test to the downside did it take? beyond value, if it opened up in value. If it opened up outside of value, then did it try to test back into previous day's value? And if it tried to test back into previous day's value and failed, what did that look like and where was that test to? Because that's a key area for me. So what becomes important for me, and this is for me, and I like to give people this information because to me this really starts reflecting the overall auction. And again, to understand the overall auction of any specific instrument is to understand the overall context of that specific instrument. So I do track whether or not an instrument opened up in range and inside of value. And if the answer is yes, then I really want to see what the characteristics of that open was. Because, for example, if it opened up in value and auctioned back and forth, which this did, auctioned back and forth, and didn't test back down to the value area low, but broke through the top of the value area like this did on Friday, then look what happened on Friday from Thursday. The top of the value area is right here at 1915. And look what happened from 1915 all the way up to this 2025 level. Real thin volume, but this was a clear breakout. This was buyers breaking out and looking for new prices. I mean, this market was in exploration and exploring new prices, and you can see through this back and forth movement, the market gained acceptance up here at the end of the day. Also, the volume profile shows you the market gained acceptance of these prices up here. If they didn't, if these prices weren't being accepted on the ES on Friday, then we would have seen price maybe close back down towards 20, 2075, 21 level, or possibly back down towards the VPOC of the day. Actually, the VPOC was up here at the end of the day. So again, value becomes very important, and I want to understand relative to the overall market, is it accepting prior value? So if the market opened up in value like it did here, 1909, and I started to get a two-sided trading, what I might do in that day is say, you know, it's relatively choppy. If it was choppy in the morning, not giving me good signals, the intraday volume profile wasn't really building out very well, then I might say, well, I want to see what the test is going to be. First test down, second test down, it failed. And then once it broke through the initial balance, I would start looking in that direction. Once you get through initial balance, it's considered range extension. This is kind of setting the table for the day. You get a range extension, I'd start looking in that direction. And beyond the initial balance, which would have been right here, and you can see a little bit of test back down into it, probably a stop run here. Beyond the initial balance, I would be looking for a natural test of the previous day's value area, and possibly up to this low volume area right there. Previous day's low volume area. First one was here at 1550. Second one was right up here. But I would be looking for at least a test of the high from the previous day. So again, value holds a lot of context for me. And if the market opens up in value and it is unsuccessful at auctioning lower, it tests down but cannot get lower, and continues back up at the time VPOC was here for the day, for the morning. And as it started moving up and broke through IB, now I'm looking higher for the day. Does that make sense? Any questions about that? So value for me at the open is something that I'm looking at the previous auction. And remember, this is only the RTH session. I'm trading back in the RTH session. And what I'm trying to gauge as quickly as possible is this market, are these participants in this market the same as they were yesterday? Or are they different? Do they have different conviction levels for the day? And value is a really good place to start. So it's one of the reasons I have it on the chart, and I'm looking for, inside or outside of value, and then outside of range. And then I want to understand what it did inside or outside of that range or value. So I look at it, the answer is yes. Did it move inside of value? Did it open up inside of value? Previous day is over here. Yep, opened up inside of value, opened up inside of range. And so I just put inside and inside as comments. All right, and then I want my opening swing high and my opening swing low. And for our opening swings, got to go back to our chart from Friday here. Hang on, I'm bringing the chart up. There we go. And for the opening swing, starting here at 8:30, I'm looking for, there's my open, looking for the initial push up, which was right here, and the initial push down. So this that would be 1907.75 and 1910. And again, all I'm trying to do is understand my context from the previous day. So for example, if tomorrow opens up way outside of this area, then I might not even consider these opening swings as an issue. But what I want to see is if this thing opens up right on top of Friday's open, where Friday was, I want to understand, are we looking at the same potential interest level of these buyers and sellers? Might I have a day similar to Friday? So again, all of this is for me to, as quickly as I can, to try to identify whether or not the participants of this current auction have anything in common with anything from the previous auction. And I'm going to show you another example here. So 1910 and 1907.75. Now I'll tell you, from a trade standpoint, an actual trade-on standpoint, I use this opening swing high, opening swing low significantly more at the open than I do the next day. So the relative value of opening swing high and low only becomes relevant for me if the next day is opening on top of this day, the previous day. So if I'm opening in the same area, within a couple of ticks of the previous day, I just want to keep that as reference. I'm not going to make any trades off of this level. I just want to keep it as reference. That's all. So 1910, 1907.75. Remember, my whole goal is to understand the context of this auction and where buyer and seller's interests are. Once I have a pretty good feel for that, now I know whether or not this is likely to auction higher or likely to auction lower. And I can start looking more effectively based on my trade plan at longs or shorts, depending upon where the market might test to in the morning. So one of the things I want to do is mark this 1907.75, 1910, is I'll just go ahead and put those numbers in. The other thing that this will do for you in any instrument, so whether you're trading oil, the dollar, the euro dollar, Forex, doesn't matter, is it will, over time, and I believe that people should get very intimate with whatever instruments they're trading. Over time, it'll give you a sense of what is a normal opening swing. And a normal opening swing on the ES is going to be anywhere between 2 and 3 points. So that's relatively normal, a normal opening swing. So if you get if I get an opening swing on the ES that's 4 points or 5 points, something's different. Something's different, and it alerts me to either sit on my hands, be careful, watch out, or it alerts me that we may have a very early breakaway. So I also like to mark the IB high, IB low, and there are a couple of ways of doing that. And really all you're looking for in the IB is the first 60 minutes of trade. So there's a couple of ways that you can do that. You could have tagged it the day before, and this one is from a relative importance standpoint. You can just do a 30, I think I have a 30-minute chart here. You can just do a 30-minute chart and tag your opening swing, your IB high and IB low. So my initial balance for Friday I have as 1911 quarter down to 1903.75. And let me find, I just pulled that off a simple 30-minute chart. I might have closed it. Let me just see. Oh yeah, here it is. Okay. Okay, let me just pull it over. Just a super simple 30-minute chart. And here's my 30-minute for Friday. 1903.50 to a high of 1911 quarter. There it is. That's my IB. And if I set these lines, let me just show you something. One of the reasons I picked this. Look what happened when price finally broke through, and this line, I don't want to say it became support, but I could see as sellers really started failing getting through here that we were going to go higher. And once we started getting volume above this IB, we started getting volume range extension above IB, it's just a matter of time before this started looking higher. So my expectation in the market is that this is going to try to look higher for the day. The only thing that would have changed my perception or perspective of where price might go is if we saw price come back underneath IB, inside of IB, and IB start to become, call it for any better term, resistance. So if I mark these things, and again, it's just the first hour of trade. What are the tops and bottoms of the first hour of trade? And I told this to you before. When you get a low volume area on your intraday profile that lines up with the bottom or top of IB and price breaks out and starts building some distribution above or below, when price retests back towards that IB, probably a couple of ticks in front of it, those are often, as long as the print confirms it, those are often phenomenal trades. Phenomenal trades. So here's another example of an IB. Here was the low. Here was the high. This was Wednesday. Here was the high. And then you could see price breaking out. Price trying to break out. Price trying to break out of the IB. Couldn't. And it wasn't until price started coming back inside of IB, and you can see in this, I'm going to try to make this a little bigger. I'm sorry that I know that these are really small. Let me make this bigger for you. And the reason I'm doing this is because I want to show you the relative importance of this initial balance. And this is pretty specific to the ES. I don't see this in the indexes, so the YM as well as NQ. I don't see this as much as things like on oil, gold, etc. So, and especially for the ES, if this is what you're trading. Again, here is the low of this one, and the high. We'll just get this out of the way, and we'll just call that was a high. So this is the first 30 minutes. Big IB. I mean, this was 05 to 18, so 13-point IB. And you can see once price got above it, it kept trying to go higher, trying to go higher. Excuse me, a couple of times it came back down. Now, if this was my IB and my intraday low volume area was here down at 1750, this is where I'd be looking to take my long, not right at IB. Wherever the low volume areas of the day relative to the IB is where I'm looking to take my long. But like I told you, once price starts coming down below and it starts becoming more resistance, the top of IB, Now I'm looking and expecting price to move lower on the day. So the initial balance on the ES for me, I mark it because it is another, call it a water line relative to the overall auction. Relative to the overall auction. And usually it provides a fairly good indication. And you gotta keep watching the print. That is your ultimate indication of where price is most likely to go, at least what direction price is most likely to go. So you can see on Thursday, once we dropped underneath IB, likely got a low volume area right here, but never came back up to test for this trade. But with the way that this was extending lower, you would be looking to get onto that trend and take this lower. But the likelihood is that it was going to go further down. So just from a number standpoint, if you like statistics and things like that, then you need to know that 80 to 85%, could be 82% of the time, when price breaks IB, or let me put it this way, 80 to 85% of the time, either the top or the bottom of IB is going to be the extreme for the day. So understanding where IB is, top and bottom of IB is, and where it breaks becomes very important. And if price breaks back up or down through that initial balance at top or bottom, and that starts becoming, call it resistance, if you will, support or resistance, depending upon which way you're going to go, then there's a probability that it's going to go back down. You'd be looking for a trade back down towards the high volume area inside of IB. And if you have a really small IB on the day, meaning that the market may be a 4 or 5 point range on the IB, and it tries to break up higher and can't, and can't break, you don't get much range extension through the top. Let's say it moves up, you don't get much range extension through the top. Then if it comes back down into the initial balance and can't get back up through it very well, you see weakness at the offer above it as it tries to get back up, strength in the bid as it's starting to come back down. If it's a really small IB, there is a higher probable chance that price is going to come all the way back down through IB and give you range extension on the other side, and that's basically called a neutral day. But that's relatively significant. If price, it means that one side took off, had conviction in the auction, and tested higher, and the other side with conviction pushed them back down. And then what's important is, where does this thing end? If it ends inside of the range, the primary range for IB, that's telling you that there's likely acceptance here, and you could probably look for an open somewhere in range, et cetera, et cetera. But all of this that I do and everything I'm here sharing with you and that's in the homework is to identify the relativity of price and activity between buyers and sellers in the auction. Everything that I do is to gain some level of understanding of what is this market trying to do and how good of a job of it is it doing. Yes. Roberto, you said, I have seen that the IB usually gives you one of either the high of the day or the low of the day. Yes, that's what I mean. When I say 80 to 85% of either the high or the low of the IB is going to be either the high or the low extreme for the day. So when you get range extension, meaning beyond IB, knowing that, say, 80% of the time, you're not going to see the bottom, and the bottom is likely going to be the extreme of the day. That's why I look for a retest back to a low volume area. And if that low volume area is somewhere inside of IB, that's where I'm taking my trade in the direction of the range extension. Yeah, I can. It's a high percentage of the time. It's upwards of 80% of the time. Now there may be days. For example, there's an old saying, and it typically runs relatively true, which is neutral begets neutral, and that means when you have one neutral day, it means the market's somewhat in balance, and you're likely to get another neutral day behind it. I've seen up to 5 neutral days in a row, and I will also tell you that in 2013 and 2014, you can throw the word normal out the window because especially on the ES, there has been nothing relatively normal, which is why most people who trade with quote unquote systems have not done really well for the last year and a half because the market has not been trading normally in most systems, and why trading the auction and understanding what the market is likely, what it's doing, what it's trying to do, how good of a job it's doing, will tell you where price is most likely to go. All right. So and I can check the stat. The point of what I'm telling you is, and why I check my IB and why I mark it during the day, is because the probability and the statistics is that it's a high percent of the time. So when price breaks IB, and again, I need you to put this in context of the volume profile and what I'm teaching. When price breaks IB, and let's say let's say price tested down in the morning, and I got strong responsive buying, so strong activity in the print on the offer as price was moving back up, and it started testing down again. And as it tested down, I could see the weakness in the bid coming in, and once again, strength in the offer coming in, pushing up through the top of the IB. There's a lot in the overall context that I'm reading that says buyers have conviction. They're likely looking to take price higher. So if they're going to take price higher, and I don't really like to take breakouts a lot, I'm going to look for a logical pullback before I take my long. So my context is one test down, second test down. The second test was a higher low, and I could see weakness at the bid, strength at the offer. We're breaking through the top of IB. I've got a low volume area, maybe a point and a quarter below IB. I am waiting for a test back down to that intraday low volume area, and then I'm going long. Because not only now do I have the context on my side, but I also have the higher probability that those two tests to the downside were likely the extremes low of the day. So I've got a context for a really good trade. And because I'm waiting for the pullback in the low volume area, even if price does come through my level, I know where I'm wrong, right? So I'm trading up against that low volume area. If price comes through, I'm out on the other side of it. Yeah, and so that's the context of the IB and why I have it in there. So I mark that IB, and again, it's a really simple 30-minute chart. That's really 30-minute bars. That's all this is. And once you have that, you can identify it. The other thing that I will tell you is if you have, and I could put something in here that actually calculates the spread on the IB. If you have a spread of an IB larger than 5 points, that's above average. When you get like this, 8 points, or like we had 13 points on that day, that's a fairly significant IB. You know, if you're looking, say, if you get over 7, 8, it's getting pretty big. If you've got an IB 3, 4, 5 points, and you're going to start seeing this in the last 3 weeks of August, you get IBs of 3, 4, 5 points. You need to understand it's like that opening hour on the ES is like setting the table, and the base of that table is really, really narrow. It's really, really small. That table can get tipped very easy. So the likelihood of range extension is significant if you've got a really small IB. And like I talked to a couple of times last week, and I don't expect that you would have remembered this, but when I'm looking at IB and I'm looking at a break of IB, and this is typically why I take a retest, either long or short beyond IB, is I am always looking to see, does price move 1, 2, 3, 4 ticks above or below IB, show me a finish. Let's say it goes 4 ticks above IB, show me a finish on the profile and weakness at the offer and strength coming in at the bid. I'm not interested in going long. What I need to see, because I'm really looking to trade with those buyers or sellers, what I need to see in the volume profile and in the print, they have to jive with